started. This is a show where we discuss all the stocks that are buzzing in trade today. On the technical side, we now have Nilesh Jain, Head of Derivatives and Technical Research at Centrum Broking, now joining us. Nilesh, thank you so much for taking your time out and joining us here on ET Now. But before we come to you, let's put the spotlight on Vodafone Idea then. There were some reports yesterday which suggested that government has given relief to the tune of 84,000 crores to the company, but now company has gone ahead and clarified that it has not received any government communication regarding relief on 84,000 crore worth of government dues. So that's the clarification. Remember, the stock was up nearly 6% in yesterday's trading session. Today also holding up with gains of nearly 5% in trade today.
All right, coming to you, Nilesh, we've picked out Bharti Airtel for us. Tell us, what do you see on the charts of Bharti Airtel? That's up and away 1.5%. But Bharti Airtel has also been, a clear outperformer in last 6 months. 23% returns by Bharti Airtel. Do you see this outperformance to continue?
Very good afternoon to you. Absolutely. So Bharti Airtel, in fact, this particular stock hit a new record high today. We have seen this particular counter moving in an upward trajectory since a long time. It has been in a secular uptrend. Looks like it is heading towards 2000 mark on immediate basis, and positional target comes somewhere around 2100 plus. So it's a good buy at current level, can be added on declines. 1900 is a very strong support. So ideally, buy on decline should be the strategy. We are pretty much bullish on this particular stock for 2100 plus kind of target from near-term perspective.
Right, that is Bharti Airtel on the charts. But let's move on to the next counter, and that is we have MGL that is in focus today on the back of a note by Citi that is maintaining a buy rating with a target price of 1,700 rupees. They feel that there are open positive catalysts to watch out for. One is the fact that the clean fuel mandates, any positive 2025 to evaluate the feasibility of phasing out of petrol and diesel vehicles in Mumbai and replacing them with CNG EVs. Also on the M&A front, they believe that CGD sector consolidation is inevitable, with larger CGDs like MGL being the potential beneficiaries. Management has also admitted to being on the lookout for inorganic opportunities. On the back of that, Citi is maintaining a buy on MGL, and MGL is in focus today, trading with gains of more than 2+%.
But another stock that is gaining in trade today is Navin Fluorine. Nilesh, you've picked up this for us. It's currently trading at 4,738 odd levels. Where do you see the stock headed from here?
So chemical basket as a whole is also looking strong on the chart, be it SRF, Navin Fluorine, BAE Industries. Across all chemical basket, chemical stock, we are witnessing a good momentum. So specifically Navin Fluorine, we have seen a good price and volume breakout today. The stock is also on the verge of a major breakout from its 2-year long consolidation zone, and on the upside, if it breaks above 4780, then next target would be 5000 plus. So at present, it's a buy, and keep a stop loss below 4600, and position target comes somewhere around 4900 to 4900 to 5000.
All right, moving on then, coming to you, Ravinder, you've picked out India Mart for us. This is one of the big buzzers. Tell us, what does the brokerage note say? It is on the back of a note by Nuvama. What does the brokerage note say?
Well, as Nuvama has come out with a note on India Mart Intermesh, and they have upgraded the stock from reduce to buy and hike target price to rupees 3,800 as compared to our earlier target price of rupees 2,100. This is the business enters a new demand cycle for company, and platform improvement, in-source sales force and higher branding spend expected to boost buyer traffic and net subscriber addition for the company. And unique business inquiries per paid supply improved to 125 in Q4 FY25, and they are increasing the earning estimate by 9 to 10% for FY26-27, each driven by the higher revenue growth, while they are lowering profitability, raising target valuation multiple from 22 times to 35 times, same as pre-downgrade level, driven by the improving growth prospectus. India Mart is trading at 1 year forward PE at 28 times. So back of this, India Mart is in focus, and the stock is holding a gain of more than 5%.
Okay, so the stock is up more than 5% in today's trading session on the back of that brokerage report. That's India Mart Intermesh for you. But let's put the spotlight on the IT sector then. Birlasoft. Nilesh, you've picked up this stock for us. Tell us, where do you see the stock headed?
So apart from chemicals, the IT space is another sector which is buzzing today. Specifically, mid-cap and small-cap ITs are looking strong on the chart. Birlasoft, this particular stock has given a good breakout today. If you see the volume action, which is more than 48 lakh today, so that basically indicates a good price and volume breakout coming in on the chart. It looks like it is heading towards 460 to 470 from a short-term perspective. 428 should be the stop loss, and we also bullish across all IT. Specifically, Birlasoft is looking strong on the chart.
The sector view remains positive and you're bullish when it comes to Birlasoft as well. But let's put the spotlight on aviation sector, and Interglobe Aviation in particular, and several other stocks from the sector are in focus on the back of data for the month of May, where Indigo's market share in the month of May rose to about 64.6% versus 64.1% that the company had reported for the previous month, that is for the month of April. Now, Air India's group market share has declined to 26.5% versus 27.2%, and Akasa Air meanwhile has increased its market share from 5% to 5.3% now. Interglobe Aviation and several other stocks from the aviation sector in focus on the back of this aviation data.
All right, aviation stocks in focus on the back of the aviation data that has come out. But Nilesh, you picked out one from the FMCG pack, and that's Britannia. That is also trading with gains of 1.8% today. Tell us, what do you see in the charts of Britannia? So this one has also, been doing well. It has performed like a 20% returns in the last 6 months. Tell us, do you see this momentum to continue?
See, this particular stock on month-on-month basis, if you see, this has been the 4th consecutive months of gain, and good rollover data so far as far as Britannia is concerned in July series. So good rollover is happening. The stock has been in a strong uptrend. It is trading well above all long-term and short-term moving averages. The important support of 50 DMA, which is currently placed at 5,500. So that should be the stop loss from July series perspective. I think Britannia could be a preferred bet within the FMCG pack. We are expecting the levels of 6,000 on the upside. So it's a buy for a target of 6,000 from July series point of view, and the stop loss should be placed somewhere on 5,550.
Moving on from one FMCG counter to another one, that is HUL. Nuvama has come out with a note on HUL. They're maintaining a buy with the target price of 3,055 rupees. The ROE, ROCE and WC cycle improved to 20.5, 20.8, 28.7 and 60 days in FY25 respectively, from an earlier 20%, 27% and 54 days respectively, in FY24. Now, the Q1 of FY26 estimate is expected is expecting a 3 to 4% year-on-year volume growth versus the 2% that we saw in Q4 of FY25. Now, HUL achieved a 200 bips shift in the portfolio mix to future core and market makers in FY25. In the back of that, Nuvama is maintaining a buy on HUL. On the back of that, it has given up those morning gains. Nonetheless, it is in the green, trading with gains of 0.7%.
But from FMCG sector to the pharma sector then, Lupin. Ravinder, you have picked up this stock for us. I believe it has received an approval. Tell us more.
Well, as Lupin has received approval from US FDA for one of its tablet, and the tablets are bioequivalent to Motigrity tablet, and this product will be manufactured at Lupin's Goa facility in India, and the tablet is indicated for the treatment of chronic constipation in adults, and the tablet has an estimated annual sales of USD $184 million in the US as of April 2025. So back of this, Lupin is in focus.
All right, moving on then, Ashwini Agarwal, who's the founder of Demeter Advisors, says that while the healthcare space looks attractive, one needs to be selective in their approach. Let's listen in to understand his rationale behind this.
The healthcare sector continues to look quite attractive. This is, one long-term story that is evolving in India. Healthcare costs are rising, so whether it's health insurance or whether it's hospitals or healthcare service providers, like diagnostics, etc., these will continue to grow at a reasonable clip. Now, in some cases, valuations are expensive. In other cases, they are not. So on a bottom-up basis, this is an area where one can hunt for some ideas.
We need to Slip into a very short break on that note. We'll be back with many more buzzers on the other side of the break. Don't go anywhere.
Market Fatafat, where we're getting you all the stocks that are in focus today, either on the back of news flow or on the back of technicals. And well, Nilesh, for the technicals, you've picked out HAL and Mazgaon Docks. I believe the defense pack, tell us, what do you see on the charts for this one? Mazgaon Docks has given some solid returns of 35% in the last 6 months. It is in a bit of a consolidative mode in the last 1 month. From here on, where do you see it headed? Also for HAL, what do you see on the charts?
See, defense pack today is witnessing a bit of selling pressure today. In fact, in last 2 sessions, I would say. So structure-wise, we are expecting profit taking to continue across all defense stocks. Mazgaon Dock, HAL. In fact, these two counters are looking weaker on the chart. Purely from a short-term trading perspective, we can expect another leg on the lower side. And today as well, we are witnessing a big crack across all defense stocks. So we are expecting a follow-up on the lower side to continue. So it's a sell on rise from a short-term trading perspective, HAL and Mazgaon Dock both.
Understood. So that's as far as these defense stocks are concerned. But let's also put the spotlight on Reliance Industries. Then we have 2 big brokerage reports that have come out with their report on Reliance. First is CLSA. They are maintaining their outperform stance with a target price of 1650. They say company is entering in an exciting period beginning with Q1 FY26 earnings. They expect retail to resume its high teens EBITDA growth, and Jio may add nearly 9 to 10 million subscribers during the quarter. In fact, they have also gone ahead and said that Reliance's AGM in August or September should be an important event which may hold hints for an upcoming Jio financial IPO, or rather Reliance Jio IPO, which will also be a big trigger for the stock going forward. Citi, meanwhile, has maintained its buy stance. They've given a target price of 1690 rupees per share. They say that they are forecasting 3-year consolidated EBITDA CAGR at about 16%, and they believe that the high growth rate of the company is sustainable going forward as well. So 2 big brokerage reports on big boy Reliance Industries, and the stock is holding with gains of nearly 1.5% in trade today.
Alright, Reliance up and away on the back of 2 positive brokerage notes, but another counter that is in focus today is BEL, that has signed an MOU with BVDN Technologies to boost domestic defense and electronic manufacturing. They have partnered with BVDN Technologies to co-develop and manufacture indigenous tech in Wi-Fi, 5G, radar, naval and rail systems that supports the Make in India and defense electronic goals. On the back of that, BEL is in focus today. It has given up all those morning gains. In fact, it is at the lowest point of the day right now, reeling under selling pressure. BEL, like other defense counters that are reeling under selling pressure, with cuts of 2.6%.
Okay, so that's BEL for you, but let's again put the spotlight on a metal counter, then Hindalco, on the back of an acquisition that the company announced. Rabinder, tell us more.
Hindalco will acquire 100% equity stake in US-based aluchem companies, and the acquisition will be carried out through Aditya Holding, a step-down wholly owned subsidiary of the company. An acquisition to be completed within next 2 to 4 months. A transaction to be expected to close in the upcoming quarter. And if we talk about the cash consideration of the deal, then the enterprise value will be $125 million. If we talk about aluchem company, then the aluchem companies is a prominent manufacturer of specialty alumina, and the objective of this acquisition is that it will mark significant investment in specialty alumina and key step in scaling its high value technology led materials portfolio. So back of this, Hindalco is in focus, and the stock is trading nearly 0.5%.
Alright, moving on then to the next counter that is in focus today, and that is India Cement. Now, India Cement is in focus today on the back of the CARE ratings that has reaffirmed ratings for long-term bank facilities. CARE AAA stable, long-term short-term bank facilities CARE AAA rating stable, CARE A+1, and assigned CARE A+1 plus commercial plus to commercial papers as well. And on the back of those ratings, India Cements is firing in all cylinders today on the back of a stable rating coming in. It is trading with gains of 7+% in trade today.
Okay, so that's India Cements. The stock is up over 7% in today's trading session. But let's also put the spotlight on Federal Bank then. The bank is in focus on the back of a report that Motilal Oswal has come out with, where they are maintaining their buy stance on the stock. Motilal Oswal says net interest margins are likely to be in pressure in the near term, but the management aspires to reach 3.5% net interest margins by FY28. They are also aiming for 17% loan CAGR over FY25 to 28 period while maintaining their strong asset quality position. In fact, Motilal Oswal says that the return on asset recovery is likely to begin in FY27, which is expected to see a sharp uptick to about 1.5% by the end of FY28. FY25 credit growth also slowed down by about 12% due to deliberate cutback in corporate lending. But the outlook on Federal Bank continues to remain very positive. Motilal Oswal has maintained its buy stance. They have hiked their target price to 250. The stock is in focus on the back of that.
All right, Federal Bank in focus today. But moving on then, the new guidelines by RBI will positively impact the business, believes Harsh Bajwa, Director of Finance, REC. He also talks about the upcoming projects and the expected timelines. Let's go across and listen in.
We expect this will act as a booster to the business, and it will help to not only to the REC but to the NBFCs, other NBFCs also. We expect that our loan book growth would be around plus minus 12%. But yes, it will be on the yearly basis. Some of the quarters may be a little less, and some of the quarter it may be a little more. We have the perfect mix, since I cannot have way on even a single source of funding, since my requirement is around 1,70,000 crore rupees. So it will be a mix of all kinds of borrowings. And we expect that by the year 2030 to some of the pilot projects will come. But this is the new area which REC is ready to tap this market, and this will give us a ample opportunity. So it will take little time. I think that the funding should, the project may get sanctioned in the next 2 to 3 years, and the disbursement will take place by the year 2030 or 31 in some of the projects. But in full phase, it should come in the next 10 to 12 years. But yet, yes, this is an opportunity for RC to tap this new area, and this will add to our loan book in the future.
That's the view coming in from the management of REC on the outlook going forward. But that's all the time we have on this edition of the show. Nilesh and Rabinder, thanks so much for taking your time out and joining us here on Market Fatafat today. But let's get going with a programming update then. The Bond 2025 Climate Conference is underway, serving as a crucial mid-year checkpoint ahead of COP30. Geopolitical events casting a shadow over the talk. The Indian delegation expressed disappointment over the exclusion of climate finance and legal obligation of developed countries discussed from the Paris COP. The $100 billion pledged by developed countries to developing countries has remained a point of discussion for the past few COPs. On June 27th, key policymakers and leaders come together to discuss the climate finance responsibilities towards COP30 at the second edition of the Times Network India Climate Summit in New Delhi.
All right, with that, it's curtains down on this edition of Market Fatafat. Ashish and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Closing trades coming up next.